Good morning, everybody, and thank you for giving us your time for this very quick webinar with Impact and Fleet Mortgages. I'm pleased that we've got Louisa and Giovanna from Fleet, and they'll introduce themselves in a second. We do have questions and answers button request at the bottom of the screen, so if you have any questions as we go through the presentation, please do submit those. It's really good to have some interaction. And obviously you've got a live entity here, so to ask Giovanna and Louisa any questions that you wish. So without further ado, let me pass over to you guys and the presentation, and then I'll pop back in a little bit later and ask questions as we go. Over to you, thank you.
Thanks, Dale, and thanks very much for the opportunity to present today. My name is Louisa Ritchie. I'm the Key Account Manager for Fleet Mortgages. I look after all of the relationships with our networks, clubs and distributors. And as relationships are so important in this industry to build trust and gain knowledge, it's a really good opportunity for us today to talk to you a little bit about Fleet Mortgages, how we're doing, and also we're going to take you through some case studies where we've actually helped landlords and advisors over the last 12 months in actual live case studies. So I'll take you through some of our criteria and where we're able to help you. So hopefully by the end of the presentation, what you'll be able to do is actually when you get a case on your desk or you get this type of client, you'll think, oh, Fleet Mortgages will be able to help us out with this. So I'll just hand you over to Giovanna just now to introduce herself.
Hi there, Giovanna Stretfield, BDM for the South. Like Louisa said, we're going to run through some case studies today, so it's very easy to bombard lots of brokers with lots of criteria, but it's good to see some actual case studies that have gone to completion, so we'll just go through those.
Okay, great. So before I start going through the case studies, we've had some really good news, not just for Fleet Mortgages, but for the UK buy-to-let and UK mortgage market as a whole. We are on the 26th of July this year, we were acquired by Starling Bank. So we're now 100% owned by Starling Bank. I'm sure some of you or most of you will have heard of Starling Bank, and some of you may have even had bank accounts with Starling Bank, the online digital app-based bank account, which again have had a phenomenal start since launch. Now Fleet Mortgages will have their best year yet this year, which is fantastic for us, and we will look at completing over £800 million in completions this year. So fantastic year for Fleet. But I just wanted to go through just the difference of being owned by Starling as to how that happened before. So basically, and obviously the benefits for you as well. So Starling most of their balance sheet is current accounts. Therefore, the cost of funds, it's no lie, is around 4 basis points. Now, our average loan that we lend out at is just over 3%. Therefore, the cost of funds and the margin, the cost of funds is very low for us, and the margin is very high. So what that means for you, and we've just done it a couple of weeks ago, is we've reduced rates. So Fleet Mortgages are a fantastic. We're in the buy-to-let market. We're a buy-to-let specialist lender. We're an intermediary only lender. So all these things that we're doing that are really good are just going to stay the same for the time being, but we'll be doing it at better pricing. So what that means for you is obviously you get portfolio specialists, landlord specialists, but at a better price. The other thing that we're really good at is being able to turn that around in quick time. So currently, all of our turnaround times are within 24 hours. So although we can pretty much reduce rates as and when we like, we will want to maintain that service for you so that we can make sure that we're giving you the best service from start to finish on your cases as well. Now, there's lots and lots of opportunity in the market at the moment. The interest rates are still low. Obviously, that's there's some change due to come up onto the horizon on that, but interest rates are still low. And when interest rates are low, investors see bricks and mortar as a sound investment. And also, when there's economic uncertainty, tenancy demand does tend to rise, and history does teach us that. There's lots and lots of waves of 5-year fixed coming to an end. So absolutely massive opportunity in the buy-to-let market for you guys. So as I said before, what we'll do is we'll go through some case studies and we'll actually look at seeing exactly where fleet mortgages can help you place these cases.
Brilliant, exciting times. Thanks, Louisa. Right, so this first case study is capital raising. So the consultant, consultant needed help with the customer's remortgaging a house. The tenants had lived in the property for over 8 years, so they wanted to grow their portfolio, but they hadn't found a property yet. So the consultant had many problems when trying to place this case. For example, a new AST was arranged every 2 years. They were great tenants, so there were no rent rises either. They needed a lender to use the market rent to maximise the amount they could borrow, and they didn't have an onward purchase address. So what we do is, it's really great with Fleet. We'll go off the open market rental valuation, so not what they're currently receiving. So say, for example, you've got this scenario and you've got the landlord who knew that, they're charging them £1,000, but they can probably get £1,300 per month on the open market. Then you put that down on the application. You won't actually put down what they're getting, and then it's just confirmed by a valuer, which is good. In this case, the valuer's report returned £300 higher than what the client was receiving. So not only were the client able to get the amount of, not only were the client account able to get the amount of money that they wanted, but they were able to get more. So they took advantage of this, and the capital raised the purchase of further property. Remember that no future address is needed. So they just get when they capital raise, they get the money in their account. They can use it for extending their portfolio, business purposes, so cash injection to existing businesses, or even to buy a new business, property refurbishments. The only time we cannot capital raise is for gambling debts or personal tax bills. So we can consider inheritance tax and capital gains tax as well, which is really good.
What I will just add on that is property refurbishments. There is a massive, massive opportunity now to look at refurbishing properties, because as you're probably aware, there's EPC regulations that are changing in 2025. Now, if you've got all these 5-year fixed that are coming to an end, and you've got your landlords that are looking to refinance and remortgage and capital raise, have a chat to them now about looking at making sure that their property is EPC rated C or above. And that opportunity comes into play now, because if you put them into another 5-year fixed, imagine what they would feel like if they didn't have the cash available when the regulations came into play in 2 or 3 years' time. So the opportunity is now to talk to these landlords about capital raising to make sure their property is green efficient going forward.
Definitely. So moving on to properties next door. So the consultant challenge on this one, they wanted to buy the property next door to their main residential, and they wanted to purchase it through a limited company, must be an SPV. So some lenders expect that when you've got a client that actually has a resi property and then they want to buy next door, that there's risk of knock through. We all know that doesn't make sense. Doesn't make sense at all, because why would they want to devalue their property? Okay, so they were looking to place this case. So subject to exposure limits, we can do up to 3 houses under 1 freeholds. If they wanted to buy the whole street, they can do. We do have exposure limits on flats, but there are no exposure limits as such on streets and houses, which is good. If they're under 1 freehold, just remember that they need to be submitted under 1 single application. But if you've got, say, 2 or 3 houses under 1 freehold, then you can do it as 1 application.
Yeah, quite often at the moment, we've found that landlords are, they've bought a property in a street, the yield is particularly high, it's doing really well, and they think, right, actually, I want to buy 2, 3, 4 houses in the same area or on the same street. Some of your mainstream lenders will not look at that because of the postcodes, they won't, and their exposure. We have no issue with that whatsoever. So if your buy-to-let landlords are bought in an area and they're getting some good yield, rental yields on their properties, and they want to buy 2 or 3 more houses in the same street, then come to Fleet, because we will look at that, no problem.
Definitely worth thinking about Fleet for that one. So ex-local authority, we are absolutely fine with ex-local authority. So the challenge in this one was that the block was 30% privately owned, so 70% council still. They had deck access, balcony access. Consultant on this one was having difficulty placing the case because it was an ex-local authority block and the majority was not privately owned. So moving on to the next one. Right, so deck access is absolutely fine with us. As long as we can get positive valuer comments, then we're fine with it. You know, I had one the other day. This one particularly was 30% only privately owned. I had one that was a lot higher and we still went through it. Just remember, for ex-local authority, it's capped at 70% loan to value. And then the minimum valuation is 75,000, above commercial is 100,000 as well. So just remember that one.
Yeah, so just in terms of ex-local authority properties, the maximum is 70% loan to value, but we're finding at the moment, but landlords are buying up these ex-local authority properties because they are at a really, really good price and also offer a high rental yield. And what we can do in terms of this is we will offer a free valuation up to 500,000, and we can put the arrangement fee onto the loan above the loan to value as well. So in terms of that, it makes the actual purchase for this particular client or this landlord really, really quite well, low fees up front. So, you know, practically nothing to pay up front. So it's a really, really good way of being able to buy properties at low purchase prices, and you know, obviously maximise the rental yield on it. So we do get a lot of business in on ex-local authority and deck access, especially in the south. But obviously there's a couple of caveats there, which the minimum loans, the minimum value is 75 and 150 outside of London in the south. Inside London in the southeast.
Yeah, it's worth remembering we just have to go by valuers' comments, but yeah, we definitely can do it. Above commercial, my absolute favourite, because we do these a lot. Consultant challenge on this one. This was one of my brokers. So mortgage consultant from Reading had a customer who wanted to buy a property in Hertfordshire. It was above a Domino's pizza. Most lenders would not entertain anything above banks, building societies, hairdressers, smelly takeaway outlets, just purely for the fact of resaleability issues. And obviously, if you're not pizza lover, you may not want to live there. So with us, so we'll consider properties above commercial units, restaurants, takeaways. I had one the other day that was, they can go to 75% loan to value as well, which is good. I had one the other day that was above a Japanese restaurant, which is just completed, which is great. Had one in the deepest, darkest depths of West Croydon that was above a chicken shop. Resaleability value, the valuer deemed it resaleable, that was absolutely fine, and that completed recently as well. So just remember, above commercial, adjacent to commercial, the minimum valuation is 100,000. Positive valuer comments, and we're happy.
Yeah, good stuff.
So the minimum valuation, so on this one, customer wanted to buy the property in Bradford for 70,000. They only wanted to borrow the 49,000 on this one. Some lenders have raised their minimum valuation. Others have a minimum loan size. So with us, our reduced property valuation has gone to 50,000, which is good. Just remember that although we are back in the market for 80% loan to value, just remember that anything under 74,999 is capped at 70% loan to value.
Fleet mortgages, we're seeing a lot of this where landlords are diversifying out of London and the southeast and chasing yield rather than capital growth, and buying properties up north. And obviously this is really quite popular because you know, free valuation up to 500,000, arrangement fee can be added to the loan. Literally, you know, it's a done deal. We can do your lower value properties for you, no problem.
Yeah, took the words right out of my mouth. I was going to say as well, Chris, the Northern BDM, for obvious reasons, sees a lot of these. So he's really, you know, bringing a lot of business in at the moment now that we've reduced that, which is good. Next one, please. So shared accommodation. This is really good. Let's just move that. Sorry. Right. So the consultant challenge on this one. So they're trying to place a student-let property. Property was not altered at all. And it could be going back to like a family home. There were unrelated people sharing the house with a bedroom each. So they were all students. Consultant problem they had like all locks on the doors. There were separate ASTs as well. No HMO license was required by the local council. And some lenders are uncomfortable with this setup. So with us, if you can imagine a 3-bedroom home that has 2 reception rooms, and your client wants to put one of the downstairs, one of the reception rooms as a bedroom, then that's absolutely fine. What's good with us is as well, you know, we allow the locks on doors. The downstairs bedrooms are absolutely fine, valued on a room by room basis to maximize your client's borrowing, and it can be multiple ASTs as long as there is a communal room. So as long as they've got one of the reception rooms, even if one of them is a bedroom, as long as they've got the one, then that's absolutely fine for us, which we don't mind. And also remember, free valuation. So this doesn't have to go on the HMO product. So the HMO and the multi-unit block products carry the valuation figure. Remember, with us on standard and limited companies, you get a free valuation up to 500,000, and then it's discounted thereafter, which is good.
Yeah, so I mean, in this, we call it a mini mo, don't we, Gio? Here, it's like a mini HMO. So if there's not a license needed by the council, typically, if you're talking to your landlords and you're saying, right, well, let me help you increase your rent, then who's going to say no to that? So if you've got a family, say for example, they're renting a 3-bedroom semi-detached house in North London, and a family goes in there earning and they're paying 1,200 quid a month. Instead, why don't you put students in there, locks on the doors, 450 quid per room, 3 rooms upstairs, 1 room downstairs, and then you're getting £450 a month from each room, £1,800 a month in rent. Total, it's a no-gamer, like, you know, and that's the good thing about this is it's on our standard rates, not our HMO rates, which other lenders would look at this and go, oh yeah, no, HMO product. We would put it on our standard rates, free valuation up to 500,000, and again, very, very low cost involved there.
Which is good. Right, so the next one, remortgaging within 6 months. So on this one, their challenge was the client purchased the property at 202,000 and they spent £80,000 on the renovations over the 3 months. They believed it to be worth 380,000 after works and wanted to take their funds back out. So £80,000 worth of work, it's doable that it can, you know, add on, you know, 178,000 extra. They had many problems on this one. So not many lenders would lend on the new market value within the 6 months. And they wanted to go to 70% loan to value. They needed a speedy transaction to go through because they wanted to fund other projects as well. So with us, day one remortgaging, we don't call it day one remortgage anymore because we do need them to be on the land registry, okay? So if you've got a client that had bought it on a bridge, absolutely fine, they can capital raise. We'll accept remortgages within the 6 months against new valuation, but only if there's been work done on the property. It's worth remembering that if they did buy this cash or on a bridge and they wanted to take it out day one without doing any work, then it has to be at the purchase price. When works have been done, we can go on the open market value as long as it's confirmed by a valuer. And it's really easy. I mean, we see a lot of these. So what you'd need is like, you need to provide like invoices, photos. I had one the other day where it was videos and it was all signed off and it was fine. Again, capital raising, going back to what I was saying earlier, any purpose at all, apart from obviously paying personal tax and gambling debts. Okay, and again, I can't emphasize enough, they must be shown on the land registry.
Again, this one, limited company SPV. Client had an SPV wholly owned by a parent company, and the SPV held properties in some commercial premises, and they were purchasing another buy-to-let in an SPV name. In this particular instance, some lenders require a standalone SPV for buy-to-lets. So they weren't happy with the fact that they had commercial property in the same name. We are absolutely fine with that. The portfolio stress was a problem. Now, in terms of what we do for limited company SPVs, we'll go up to 80% loan to value now. So we've just changed that actually last week. So we will lend up to 80% loan to value on our standard and limited company SPV range. Now, we get a lot of business in on SPVs and limited companies. Over 40% of our business is now coming in because we have seen quite an uptick in the fact that people are like, they understand the tax reason, the tax changes now. It's settled, it's done and dusted, and people are now know whether they want to buy through an SPV or individual, and they're seeking that proper tax advice. And it is important to make sure that they do seek that proper tax advice. Now we'll come on to this in just the last and final case study that we're going through, but in limited company SPVs as well, what we'll also do is we'll do intercompany or directors loans. So just give you an example of that. If you've got a trading company, a lot of lenders won't lend to trading companies. However, they set up a subsidiary SPV of that, then we can lend to that SPV, or we can do it in that SPV. Now, an intercompany loan is where they can take out money from their trading company and put it into their SPV and use it as a deposit for that property purchase, and we are absolutely fine with that. And you can use a desk calculator as well. The reason I'm saying you can use a desk calculator is, like I said, the last and final case study will explain to you probably the top 5 reasons of why you should use fleet mortgages. And Gio, do you want to go through this one, or yeah?
Definitely. So the consultant on this one, the client was a higher rate taxpayer. They own the 4 buy-to-lets in the background. They wanted to capital raise to purchase more. The problem that they had was some lenders have stricter rental calculations for higher rate taxpayers. So the debt to income ratio was also quite high, and they needed a lender who didn't work on affordability. So whether your client is a higher rate or lower rate taxpayer, we'll do everything at 2-year fix at 125 at 5.5. Okay, so not 145, it's 125 at 5.5. Remember though, what we do have is pay rates. So our 2 years starts from 2.59 at the moment, and you got the 5 years from 2.99. So in effect, it's 125 at 2.99, which basically means that your client can borrow a lot more. On the next slide on this one, it just works out, and you can see, it says on here, they can get an extra, if I could just move that over, so they can get an extra 170,000 just by using the pay rate calculations. Has you got anything to add on that, Louisa? Because I know that you were talking about this the other day, and you just sounded very, very passionate about this, because it's great.
Yeah, I mean, it's just amazing. If you want to borrow more, come to Fleet. If you look at the calculator on the system, you can borrow substantially more than what you can do with any other lender. One of the other good things about us is that we don't stress test the background portfolio. You can have 4 or 400 properties in the background. It doesn't matter. We will only look at what comes to fleet mortgages. And at the moment as well, when you're looking at capital raising and they're looking to refinance and their existing portfolio, have a talk to them about what goes on in the future. What do they need money? If you're looking at fixing them in for another 5 years, have a look at the regulations that are coming into play and make sure that they have that money in their bank accounts to do those renovations if they need to. And yeah, the one last thing I would say is we don't ask for ASTs, cash flow forecasts, bank statements. It's very, very simple. And with our turnarounds being within 24 hours for application, valuation instruction and document upload, it's a no-brainer. #ThinkFleet.
Yeah, and just going back to the case study on there, one of the main things on there was the debt to income ratio. So it's like Louisa said, we don't take that into consideration at all, and we cannot bang on about enough about how we don't stress test the background portfolio. We need to know what they own, and that can be on your own Excel spreadsheet. It can be written down on a Word document. It can be on another lender's lender's page, or it can be on our one. But we just need to know what they own, but it's not stress tested at all. So yeah, no, thank you very much.
Great stuff, thank you. We just had a question come in that is the shared accommodation, does it have to be students?
No. Not at all. They can be related, they can be unrelated. It doesn't matter with us at all. We only use students as the example on that one because that's one that actually was a case study, and it was actually particularly students in that case, but they can just be professionals. They don't have to be students at all. No.
Brilliant.
Yeah, just to add into that, we do lets to students, we'll do lets to the council, vulnerable people. We'll also do corporate lets as well. So if you have a corporate let, then please send it in to us prior to keying the dip, because we need to just get it looked over by our legal, but we do corporate lets. And we'll look at ASTs up to 36 months as well. So again, just to give you a bit of an extra information on that as well. So anything abnormal or just out of the box or quirky with your ASTs, then just give us a call.
I think fleet, definitely.
That's really good. I think some really, really good key points on there. And I think the one bit I think I'm going to take away is the taking the open market value on ASTs when it might be different actually what's happening to what the valuer said. So I think that's really good point.
Definitely. Never send us in ASTs or never send ASTs in because the underwriter can't unsee anything. We never ask for them. It is just the valuer's confirmation.
Sure. Cool, that's really good. Right, we've got a couple of minutes, so please send in your other questions. I've got a couple for you first. Obviously, we're coming to the end of 2021. What does 2022 entail for the broker market, but also for fleet mortgages?
Well, I think I'll answer that one. So I think there's a lot of opportunity, like I said, in the UK buy-to-let market specifically. There's lots and lots of opportunities out there that we've covered. And now, obviously, being 100% fully owned by Starling, we have ambitious targets. And I think what we want to do is, obviously we're on a massive recruitment drive at the moment. So we've been recruiting underwriters, completions officers. We've got 3 new BDMs on the road that have just, I think we've got 2 starting. We've already had 2 starting and we've got another one starting in December. So we'll have more BDMs on the road to help you guys out with your inquiries. I think, again, obviously with this whole hybrid of Zoom stroke getting out there and seeing people, I think we're all down to get out and see people face to face a lot more. So I think we'll see a lot of that going forward into 2022. So I think, again, specialist market particularly is a fantastic place to be. And I've been out on the road over the last week speaking to lender partners, and we're all very, very excited about what we've got going on next year and what's going to happen. So all good.
Brilliant stuff. Another one, valuations. There's quite a lot that are being down valued at the moment. Is that something you're seeing across certain areas, or is it across the whole country currently?
I wouldn't say I'm seeing a massive, sorry Louise, I was going to say, I wouldn't say I'm seeing a massive influx of them. We use Gateway as our surveyors, so we don't use, I think we used to use Connells a while ago, so we only use Gateway. What you can always do, I always say, you can appeal and provide comparables and things like that, but I'm not seeing a massive influx of down valuations at the moment. What are you doing? Were you seeing any, Louisa?
Not from my point of view, no. I've not seen any down valuation. So I'm
obviously don't obviously don't overinflate, and obviously look at the market conditions around that area. But I'm not seeing a lot, Dale. I know that I did have quite a few, because a lot of obviously there was COVID that was being used as an excuse for a lot of down valuations. But at the moment, I'm not seeing a huge influx at all. I can promise you.
Okay, cool. Thank you for that. I haven't got any others currently. Is there anything else you want to add? We literally got a minute left, and then we'll bring this to the end. So last words to you ladies.
Yeah, I mean, basically, we've got a really, really good team of people. We've got live chat on the website. So if you haven't registered for Fleet Mortgages, I'd recommend, it just takes you 2 minutes to register. And if you've got a question, you can call us within minutes. You can call us within seconds, but you can get an answer on our live chat within seconds as well. So I hope that's been really, really informative for you, and hopefully it's given you a little bit more of an idea as to what we do here. But really what we want to make sure is we give you the best service possible. So yeah, give us a call, contact your BDMs. They're all very, very knowledgeable on all of our products and criteria. So yeah, give us a call.
Yeah, thank you for having us. Definitely really enjoyed it. Thank you.
Yeah, thank you for a really good presentation. And remember, Impact are one of Fleet's approved packages, so give us a call to discuss any of their entities, or if you've got any other inquiries. Appreciate your time this morning. Thank you very much for watching. Keep an eye out. We'll send out some more emails with future events that you can register and come on to. And in the meantime, have a great day.